Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the monthly twin webinar today, Tracking the Forex Market Together. This is basically a market reading technique, and I'll be doing the part 1 between 9 and 9:45 GMT and part 2 between 13 and 13:45 GMT. So 2 parts. It will be given in 2 parts. The first part, I will explain to you what is a simple market tracking technique I use and how it can be used effectively. And also along with that, we can use the trading strategies to earn consistently from the market. So I've been giving on a weekly basis the market reading technique using the following strategies. Namely, I've got a derived algorithm, a statistically derived algorithm, and with the help of the algorithm, I'm able to develop the forecast. And this forecast model gives the session-wise forecast. So for the 4 majors and 2 commodity pairs. So I use it as a base or the reference material for identifying what could be the possible moves which would happen on the intraday and the long term in the market. And since it is a derived forecast, so there is an element of risk involved, and the error is part of any of the expectations. So in order to fine tune the forecast and reduce the level of error, I use the market reading technique. And in the market reading technique, we use the live market quote page. This is the quote page I use. And in this, you come across the 4 majors and 2 commodity pairs. The bid and ask are shown, and also high and low are shown in the live market quote page. Besides, you come across the net change from that of the previous day close, and also the time at which the market we are watching. So this is the GMT time frame of the market, and GMT time is a 24-hour cycle. Since the market is 24-hour cycle, we use the GMT time frame to track the market. So with the help of the live market quote page, I just find out what sort of moves they are doing it in the market in all the 4 majors and 2 commodity pairs, and also make a relative comparison with regard to their moves and try to find out what are the pairs they are handling at a given time, and then try to take positions in them. In spite of the forecast and the market reading, still the players can make tricks in the market, and they can suddenly make whipsaw moves or any sort of moves. So we need to develop a very nice trading strategy. With the help of that, we'll be able to limit the risk and maximize the profit. However, the forecast, we have derived it using any type of statistical methods. The element of error is always hanging on our head. So we have to invariably limit the risk, and for that, we need to use the trading strategy. So along with that of the market reading, I will also explain to you the trading strategy. So as a result, you'll be able to find that we don't just like that incur any loss, or we don't speculate in the market. We use systematic study of the market. We try to read the intentions of the players and then try to take the positions. So in the live market quote page, you come across the bid and the ask, and also the high and the low. So these high and the lows are very important for us, and how exactly they are doing it in the market. And also we note down the net change besides the market timings. So as far as the market timing is concerned, the entire market, 24 hours market, forex market, is subdivided into 3 sessions. Session 1, Session 2, Session 3. For convenience purpose, I call it as Japanese session, European session, and US session. And 0030 to 7 GMT is the Japanese session, and 7:30 to 13 GMT is the European session. So now we are in the European session, and 7:30 it starts, and we are at 9 GMT. So 1.5 hours already over from the start of the European session. Then 13:30 13:30 to 20:30 GMT is the US session. In between the sessions, you come across the 30 minutes gap, 7 to 7:30, 13 to 13:30. They are the naturally occurring gap time between the sessions, and between the day you come across 4 hours gap. And these are all the session timings followed by the players. So if you want to understand the players' move, first of all, we have to find out what is the time frame they are following. Then, so you can call it a session 1, session 2, session 3. It is immaterial. But what are the timings they follow? When exactly they are making very quick moves? When exactly they are making subdued moves? When they are handling the majors? When they are handling the crosses? And what 2 pairs at a given time they are taken in order to make big moves in the market? We need to identify all those things. So for that, we need to know the market timing to start with. Then we need to find out what are the type of moves they are doing it in the market. Before going to the type of moves, we use the live market code page. This is the live market code page, and the link, I'll give it in the chat window. If you want, you can save it. And here, you come across the high lows and the net changes in 4 majors and 2 commodity pairs. We note down around 3:30 GMT. Why we note down around 3:30 GMT? Because that is the time they set the initial highs and the low. The initial highs and the low. Then we also note down or find out how exactly the net changes are. Are they making the USD gaining move, USD weakening move, or the contrarian move? Now, for example, here, Euro is showing negative net change of 26 pips, whereas GBP is showing 3 pips positive net change. It's a contrarian move. When Euro is showing negative net change, USD gaining move, GBP is making nominal USD weakening move. Then USD Yen is showing the USD weakening, USD gaining move because it is positive. It's a denominator currency. Yen is a denominator currency. When it shows positive net change, that means it is showing the USD gaining move. USD, the numerator, is gaining. Then you find the GBP is also gaining. It is a contrarian move. Besides, GBP is gaining as a USD weakening move, whereas USD CHF is also gaining. So that is a contrarian move. And here you find the mixed move. The 3 pairs here are showing positive net change as the contrarian move, and Euro is showing negative net change. And when coming to that of the commodity pairs, Canadian dollar is showing about 50 pips positive net change. Australian dollar is showing about 64 pips negative net change, whereas all other majors are showing a nominally less than 30 pips swings or less than 30 pips net change. So this way they try to make the moves. So we need to find out how exactly they are making the moves in different currencies during different time frame and try to enter into those currencies. I have been telling all along from that of last month or even before that, then don't try to take any buy positions in the case of Australian dollar because it is expected to make the wide range swings on a weekly basis. During that of the Monday webinar, I have been telling it. And I come across many of the traders are asking now what happened to Australian dollar which is holding, because the players have finished the multi-year trend reversals in the case of Australian dollar, and they are going to leave it as such and with nominal wide range swings, and they are going to handle the majors primarily, especially Euro, GBP. They are going to rise, and also they are expected to rise USD Yen and USD CHF, which is a long-term forecast. And also they are expected to gain slowly in the case of Canadian dollar, which is also a commodity pair. Australian dollar will be left behind. So avoid taking position there. That's what my forecast says. So we note down the initial lows and the highs in the 4 majors and 2 commodity pairs around 3:30 GMT and refer to that of the live market code page. So let me show the initial lows and the highs, what I have noted down today. Okay. So this is a slide I show it during the Asian Session Live Market Analysis webinar. And here I noted down around 3:30 GMT, the initial lows and the initial highs. So in the case of euro, for example, 1.3427 is the high. They set it around 3:30 GMT. Still 9:10 GMT, they have not breached it. Whereas the low 1.3416, they have breached it and staying below there. But they only made a nominal dip to 1.3386, still below the 0.3416. So they are holding it below that of 1.3416 for more than about 4 to 5 hours. So, more than 2 hours now, because they made the downward stop during the gap time between 7 and 7:30 GMT, and subsequently they started making the slow downward move. But in the case of GBP, they have not breached the low 56.51, even though they have been coming closer to that, and the high is 1.5670, whereas they breached the high. See how the contradictory way they had done it. In the case of euro, they made the downward stop, and in the case downward extended move, and in the case of GBP, they have made an upward move, and they are holding around 56.70, the initial high. That means they wanted to rise more GBP without any further looking down. So now USDN, 97.12 was the low and 97.57 was the high. They breached the high and formed new high 97.68. So in the case of GBP, they breached the high. In the case of USDN, also they breached the high. So how contrarian they are, and 97.57 they breached and they come below that. So that means what? They had done a brief upward stop and above 97.57 and went up to 97.68 and staying below that of 97.57. So what they intend to do after a stop, and they are expected to make a drop. Then in the case of CHF, 91.63 was the low they set, and that is not breached. 91.78 was the initial high. 91.97 they formed the new high. That means they wanted to gain more levels, as they are holding above 91.78 for more than 2 hours now. Then in the case of Canadian dollar, the low was not breached. The high was 1.0424. They just breached and formed the new high 1.0448, and staying above that of 1.0424 for more than 2 hours. They intend to make further rise in the case of Canadian dollar. Whereas in the case of Australian dollar, 0.9019 was the initial low and 0.9074 was a high. They just breached the low and staying below that of the low, slowly cutting the low. And 0.900 is the low, and they are holding it below that of 0.9019. So they intend to make slow dip in the case of Australian dollar. Now, we just used the live market quote page, and with the help of the reference level, the initial lows and the highs, we found out what are the currencies they are just handling at a given time. Then also, I have given the forecast on Monday, and the same slide I am using it here as a reference. So I just showed it on Monday, and today is Wednesday, and it is also recorded and displayed in FXstreet.com archives of the webinars session. And initially they made that dip and firm up during that of the Japanese session, 0030 to 7 GMT. And gap time they made a small dip, and also session start time they made the dip in the case of Euro and also GBP. But in the case of Euro, they breached the low. In the case of GBP, they did not breach the initial low, and they started gaining. So what they are expected to do, a further quick rise later on during the day. So we decided to take a buy and sell trade in the case of GBP, because they have not breached the initial low for more than 30 minutes from the start of the session. So I will explain to you how it has to be done. Then swing and rise moves are expected during the day. So second part, we will come across swing and rise move. And during that of the FOMC, 18 GMT, people are waiting what could be outcome. And they are expected to rise after the FOMC. They will be slowly gaining the levels and make a little bit of volatile move and then gain levels after FOMC. But that will not be a very quick rise. Slowly they will be gaining the levels. So that is what derived with the help of the forecast. So I just showed you the initial lows and the highs. I just go back to this slide. So we note down the initial lows and the highs, and also watch whether the market is closer to that of the low, or a particular currency pair is closer to that of the low or closer to that of the high. And we normally avoid taking positions in the case of majors during that of the mid level, or when they are in the mid levels, and also during that of the mid sessions, because I have shown you in the session timing that first 1.5 hours of the session is the early session. The last 1.5 hours is called as the late session. In between is called mid session. The first early session and the late session, they handle the majors, and the mid sessions, they handle the crosses. So even though it is 9 GMT past these 1.5 hours from the start of the European session, still I'll try to commit a position in the case of Euro and GBP and show you how exactly the profit can be shown by 13:30 GMT. So we used the forecast as the reference, and also we note down the initial lows and the highs and found that they have not breached the initial low in the case of GBP, and they breached the initial low in the case of Euro and formed the new low, but that new low they are not breached for more than 30 minutes. So we'll try to take a position. How? Because we track the type of moves they are doing it. Now, they make the moves based on the time frame. So there are two types of moves. They make it in less than 30 minutes. So what they do is, as I explained it, they go above that of the initial high or below that of the initial low. So in the case of Euro, they've gone below that of the initial low, and in the case of GBP, they've gone above that of the initial high for about 15 to 25 pips, and reverse in less than 30 minutes. If they reverse in less than 30 minutes, then it is a stop end. These stop ends, they do it during the session start time or the session close time. So if you watch carefully when they are making such extreme moves, you will be able to really find out that they do it around 13 GMT. If the data might be released around 12:30 GMT, you will find the squeezing happening around 13 GMT, that session close time. And then later on they make false move during the gap time, and then either continue the move during the US session from 13:30 GMT or reverse it. So less than 30 minutes move is a stop and move. They just go above that of the initial high or below that of the initial low and reverse in less than 30 minutes. And a false move is the one, they go up to that of the initial high or up to that of the initial low and reverse. In the case of GBP, they came exactly close to that of the low, 56.51, but they did not breach it and come up. That means the intent to make an upward spike in the case of GBP. Because the false move always happens before that of the extended move. What is extended move? Now, these two moves happen in less than 30 minutes. These are all the type of moves they do it. Stop and false move, extended move, intentional move, and swings. These are all the only type of moves they do it. And only during month end time and the month beginning time, they make the extended stop ends, a downward stop end. You know that GBP was making a very quick downward move from 1.53 to 1.52, and in a matter of about 1 hour, they went up to 1.54 and started gaining it. That is referred as the extended downward stop end in order to make a shift in trading zone to the upper level. That is what I mentioned in fxtrade.net, that there is going to be a shift in trading zone because they made the extended downward stop end in the case of GBP. Similarly, they had done it in the case of USD-Yen. So they will try to do it in as many currencies as possible in order to avoid anybody holding long position before making a big rise. Then, a move which happens more than 30 minutes and up to 2 hours. So here in the case of Euro, they just breached, came down below that of 1.3416 and staying below there for more than 1.5 hours and 2 hours. And then slowly they come up to 1.3416. And that is referred as an extended move. A quick downward move, stop cutting the new low and simply hold it there for about 2 hours, slowly gain the levels, which is referred as the extended move. That is inducing the traders to sell. Because when they just go below that of the support, and when the traders see that, okay, it is trying to breach support and simply holding it, and anytime it can make a free fall and things like that, immediately people will go and sell without understanding who is buying, holding and buying. And later on they find the buyers gain the levels straight away above 1.3416 and comfortably gain above that of the initial high and go up. Then they go in for the short covering. So after the drop, when the drop becomes visible if we try to sell, after the rise if we try to buy around 1.3450 like yesterday, many of the traders have taken a buy position around 1.3434 and things like that because they gained the level and they thought that, okay, it will straight make it to 1.35. They went up to 1.3452 and then start making the slide. So normally what the technical traders do is go in for a breakout trade in order to reduce the uncertainty. They try to take the position after the gain or try to take a buy position after the gain or sell position of the drop. But the players know when predominantly such traders take the position, they make an extended move, simply hold it like this, and everybody will think that even in FX Trade homepage, you find that slightly bearish. So that indicates that the market appears bearish, but they make the market appear bearish and then subsequently make it bullish. They create the market sentiment and act against that of the traders. That's what happens in the market on a daily basis. Then you find that a move which is beyond 2 hours and they do it up to that of the third session. That is referred as the intentional move. Yesterday you would have noticed that intentional move happening in the case of Euro and GBP. Euro was gaining the levels from up to that of 1.348085 and simply holding. People were thinking that it might make a brief upward stop into 1.3409 and come down. So traders were selling. And they came down to 1.3395 holding it and went up to 1.33, 3433, 3452 and things like that. Immediately they gone for the short covering. So the players know very well when to trap the traders. Around 13 GMT, when the session is about to get over, they try to make such quick move in the case of Euro and induce the traders to do the short covering. Similarly, session start time, they make a quick rise so that immediately the traders will look into that other chart and jump into the market, taking a buy position without missing it. Then later on, they find that they are the last one to enter into the bus. The bus has already reached the destination, so it is going to take the reverse journey. So that's what happens many of the time. So intentional move is the one they either go above that of the initial high, stay here. In the case of GBP, they just gone above that of the initial high, 1.5671, and continue to cut the new high slowly and frequently beyond 2 hours. Then that means they wanted to extend it up to 2 sessions. So they just gone above that of the initial high during that of the start of the European session. So European and US sessions, they will continue to gain the level in the case of GBP. And the third session, that is the next day Japanese session, they will make a very quick upward stop and then reverse. So that is intentional move. Intentional move will be always slow move. Pip by pip, they will make the rise or the drop. And extended move is a quick move. So that they will make a quick knee-jerk reaction so that the traders become panic and take the hasty trading and then subsequently see that they are trapped. So that is extended move. Extended move will be quick move. Always keep in mind, quick moves in a market or false move, they are only to trigger the emotions of the traders and also to induce the traders to take wrong positions. And the data release or speeches or any such thing, they use it as a factor so that when the traders become nervous and look for such data release, they make such whips or moves on either side and induce the traders to commit wrongly, and then later on they continue their own moves depending upon the traders' pending positions. So ultimately, these are all the types of moves they're doing. So on a mainframe, that is, as a major move on a given day, what they do is they make extended move, alternate with intentional move. After the intentional move, extended move. After the extended move, intentional move. In between, because the session gets changed, so they make session start time, the stop and during the gap time, the false move, and also swings during the mid session. So you will be able to predict, okay, now this is a mid session, so they will be doing the swing. And intentional move, they already done it in the case of GBP, but in the case of Euro, they have done the extended move. Slowly, they will gain the level. So when you understand that, okay, what is the first currency they are going to gain levels? GBP. And if you look into that, also you'll be able to find among the numerators, Euro and AUD are showing negative net changes. GBP is the one which is showing about 8 pips positive net change. And in the case of denominator currencies, USDN and USDCHF are showing 18 pips positive net change, and Canadian dollar is showing about 44 pips positive net change. In the case of Canadian dollar, as I explained, they are doing the intentional move. They breached the initial highs 1.0424, and they have just gone above that and still holding there. So slowly they will gain the levels. So we can take a buy position in the case of Canadian dollar. Okay, so this is how we take the trading decisions depending upon the type of move. So when they are doing the intentional move, coolly we can keep the position for 2 sessions. And during the start of the third session, we can, when they are making further rise, exit out of the position. If they are identifying the extended move, then take the position only for 2 hours and close. If you are trying to do during that of the stop and try to close the position within 30 minutes. If they are trying to do the false move, gap time trades, like during the gap time when they dip and after the session start, first 30 minutes they will gain. So during the dip you can buy, and in first 30 minutes of the session you can close it with a swing trade profit. So that way you can identify the type of move and then measure how much of pips you should be able to earn and make a decisive trading. Now, the trading strategy. Okay, we have taken a decision to take positions, but still we cannot afford to take unlimited risk. We have to use the stop. In case the hedging facility is not available, we can use the stop. If the hedging facility is available in the MetaTrader platform or any other platform, then it could be a sell stop or a buy stop, or it can be an entry stop. They call it, some platform, they call it as an entry stop. And this is actually in the same currency pair. And also some platform provides the trailing stop facility, the trailing hedging facility, and that can be used in order to just control your equity exposure. So we use the hedging order when the position is making loss, and we use the stop at the entry and the trailing stop when the position start making the profit. So first of all, we demarcated that hedging order is used when the position is making loss. As soon as you take a position, it will be making 5 pips or 3 pips loss because of the spread variation between the ask and the bid and the ask. And afterwards, when the position makes profit of about 25 pips, we keep that stop at entry and remove the hedge order. So hedge order is used similar to that of a stop. And once the purpose is over, we are able to keep stop at the entry. So we remove the hedge order. Then the stop at the entry is being made as a trailing stop, maintaining 15 pips from that of the market, and it will start rising as the market rise. Then we keep about 45 pips limit to start with, or near that of the high. If we are taking a buy position near the low, we keep the exit or the take profit level as a high. So these are all the initial lows and the highs. So initial low, low and the high low and the high. So we try to take a buy here, then we try to exit. That way, we try to keep the exit order or the take profit order and or 45 pips straight away. And if the market makes further gain, then we move the limit order or the take profit order away from that of the market, maintaining about 30-45 pips. And the trailing stop will continue to run. And you know that they make whips or moves in the market for about 15 to 23 pips. So you can just watch it. During the sessions, you can keep 15 pips trailing stop. And between the sessions, when they are coming to the gap time, you can make it as 30 pips. And so that you'll continue to hold the position. You know that they are making the intentional move in the case of GBP. So you can keep stop at entry and keep static stop also for protecting 30 pips profit, 45 pips profit and things like that. And when they continue to rise during the second session and start of the third session, you can book profit. So that way, you can use the trading strategy. So in a loss-making position, we use the hedging order. And in a profit-making position, we use the stop and the trailing stop and also the trailing limit order. Then how to take a decision on the entry. So we watch 30 minutes from the start of the session. As I explained, the session starts around 7:30 GMT as far as European session is concerned. We wait up to that of 8 GMT. And after identifying whether they are making the extended move or the intentional move. So intentional move, as I explained, it is a slow move. Extended move is a quick move. Whenever they make a knee-jerk reaction, that means it is a quick move, so it is a false move. They make sudden drop based on the data release. After about a few hours, everybody just discount that data and the market started reversing it. Nobody bothers about the past data and always look for the upcoming data. So that is how they induce the traders or make the traders nervous by talking about the data which is going to be released in another 1 hour. The past data, they just discount it. Market has already reacted to that. The next data is to be seen for the market to react. Ultimately, what the market can do, Euro can go up or come down. GBP can go up or come down. Nothing more than that. But they give different stories during different time. And we don't have any yardstick. For this particular data, the market has to move only 50 pips. For the other data, the market has to move for about 75 pips or 100 pips. Nothing like that. They just depend upon the type. Depending upon the data, they find out where the stops are. If there are plenty of traders who are holding long position, they make the stop hunt on a downside in a big way. If there are only a few stops, the traders are both long and short, then they carefully come closer to that of the low and slightly below that and hit their stops and start gaining the levels. So it all depends upon the trader's pending position and nothing to do with it of the economic data which is released on a daily basis, because the economic condition does not change second by second in any part of the world or in the universe also. So they simply create the hype and induce the traders as if the market is driven by the data as well as the technical conditions, etc. But ultimately we know that they can only make an upward move or a downward move. If it is a downward move, when they stop cutting the new low for more than 30 minutes, we just take a buy position and hold, and they'll start gaining the level slowly. And keep the hedging order to limit the risk. We may be wrong in our understanding, so we won't be knowing all the worldly news and things like that in our hand or at the right time. So we simply use the hedging. There is no need to know about all those things. Simply use the hedging order. In the event if it is hedged, we will review the hedge. How to handle it, I'll explain with the help of the next slide. Then afterwards, the exit is, you just exit opposite to that of the entry level. If it is a buy position, near that of the high, we exit, or with 45 pips profit, exit level, or 75 pips if the going is good. So ultimately, we enter into a currency which is making more than 40 pips spread between the low and the high. Till such time, we don't enter into the currency. Because if the spread between the high and the low is less than 40 pips, that means they are not going to operate that particular currency in a big way. There are so many days they have not been handling Canadian dollar. The spread used to be about 10 to 15 pips on a daily basis. And now only they started rising Canadian dollar. So you have to identify when they are going to do it. Accordingly, you take position so that you'll be able to book profit. Ultimately, we are not interested in the currency pairs. We are interested in which currency, if you take position, you'll be able to quickly get profit. As long as we are trader, we cannot do anything with that of the economic condition of the respective countries. We cannot even advise. We may just put it in FX rate or any other place, all our ideas, but there is no one to listen to us. And the country, respective country people, they have their own methodology. They have their own mechanism of doing everything. And we only just talk about it, thinking that they are the influencing factor. Yesterday I have seen in fxtrade.net, in the chat, people were emotionally expressing themselves and talking about various countries, etc. And beyond our house, we don't have anything which belongs to us. So, but we blindly talk about the world economic conditions and talk about all the countries and try to advise the countries and try to blame the people in the countries, etc. That is unwarranted. It is nothing but the emotional expression which comes out of failure. When we think that euro has to come down, when it goes up, immediately you feel that you are right and the market has gone against your expectations. And you start yelling about euro, yelling about the country which is using as the prime currency of euro. So that shows nothing but our weakness, mental weakness. But ultimately gaining about 50 pips or dropping about 50 pips, nothing to do with the country. If you go to the respective bank or if you want to go in for a currency conversion, about 100 to 200 pips away from this current level only, they will give the exchange rate. These are all nothing but the fourth decimal, fifth decimal tradable levels. So if they make about 10 pips gain and 10 pips drop, if you become emotional, that means we are unfit to trade. Because the players target the emotional traders. And if we continue to express our emotions, then invariably we will become victim to that of the players. Now, in the event when I kept the hedging order, if it is hedged, many of the people call hedging as a useless tool. Because if we do not know how to do trading, only then you will use hedging. That is the propaganda we have been seeing about 5-6 years back in US, and they simply eliminated hedging facility in the trading platforms. But if you are a wise person and if you have a little bit of common sense, we can use the hedging in the same pair. And if you have got a buy position, if the market suddenly drops, your hedging will protect your position and it will take against your buy a sell position. The risk will be 30 pips between the initial buy and the sell, but the market can drop about 100, 150 pips, 200 pips. Doesn't matter. But as long as you are concerned, your position is making only 30 pips loss. And in the event, if you find that the market doesn't appear to be reversing, you can simply close the original position with that of a hedging. And in the event if the hedging is making profit, if the hedging is making profit, keep stop at entry in that hedging and then let them drop about 20-30 pips and they reverse, your hedging will be closed and you can book profit on the buy side. Then if the hedging is making profit and loss, then you try to close that and keep another hedging order just below that to limit the risk. In the event if they make big moves in the market against you suddenly, like how they had done it in the case of GBP, an extended downward stop and for 150 pips, then you can quickly hedge and book profit in the hedge and keep another hedging order below when they start gaining the levels and quickly rise the hedge order above, then book profit on the buy side. You can do either way trade. So it is not fools' decisions using hedging, and it is only the fools induce the wise people not to use hedging and prevent the people using their common sense. Now we will come to the trading decisions. As I explained that in the case of euro, they are not stopped cutting the low. They have stopped cutting the low. for more than 2 hours. So we'll take a buy. And whenever we are entering the mid-market level, we always try to keep about 5 to 10 pips below that of the market. And so that we'll get a fine-tuned entry. So 1.3394, so we'll keep it about 98, about 5-6 pips below that of the market, because the market is subdued. So I'm trying to keep only 6 pips below the market, the buy limit. So when they make a small swing, my order will get filled. And in the case of GBP, still they are holding above that of the 1.5671 level. So I'll try to take a buy position here. So the market 1.5676. Then in the case of USDN, they just breached the low and they made the upward stop and come to 97.46. So we'll try to take small sell position. Otherwise you can avoid, because it is better to do buy and sell trade in all currencies. Sell and buy, we have to be very careful. The market might be tricky, but it might appear, because they make a downward moves very quickly. It appears sell and buy trade is very lucrative and promising, but that will also trap the traders vulnerably. So, sell limit. $97.4. $97.55, just about 5 pips or 3-4 pips above that of the current level. So now we have to set the entry stop or the buy stop or sell stop. So it is a buy order. So I'll straight away keep the buy sell stop. $30 pips below that of the market, we'll keep a sell stop. And here again, a sell stop. Why 30 pips? And here again, above that of the market, $97.85, 30 pips above that of the market for a sell position, we'll keep a sell stop. Okay. Now, why 30 pips? In the case of majors, we take the positions and keep 30 pips hedge orders. Why? Because the players make a swings of 15 to 23 pips in a given time. A small swing, which we call it as a consolidation, 15 to 23 pips. So if we keep 30 pips, the stop or the entry stop or sell stop, then it is unlikely to be hit. In the event if they hit it, we'll come across a better entry opportunity and we'll be able to see that clearly. And less than that, if we tighten the hedging order, invariably you will find frequently it get hedged and you become fatigued. And then you feel like closing the position when the going is no good. But if you calmly trade, you will find the easy mind will wisely look into that market and it will also maximize your profit. If you are under the grip of emotions, then obviously you take wrong decisions. The illusion play a vital role. You imagine euro coming to 1.25 or euro going to 1.40. in a matter of few hours. But it might be a very, very long-term call. But at the moment, my position, how I am going to handle, that should be our thinking. And simply talking about euro can go to 1.34, euro can go to 1.40 or 1.25. That is fine for academic purpose, but it is not going to help us as far as our holding position is concerned. So there is a difference between the intraday forecast and the long-term forecast. So as traders, we are interested in handling intraday the positions. So we have to focus on that. So try to see that without illusions and don't accept what apparently seen in the market. So what is seen in the market is not true. The hidden agenda has to be understood. It might look bearish, but later on during the day, you will be able to see that euro is also going to gain further levels. Similarly, you find that Australian dollar is holding near that of the low, but they are expected to slowly gain the level and it will be lagging behind when compared to that of euro and GBP. So every currency, when you look into it, and already from 92, they had dropped it to 90 area in the case of Australian dollar. So further gain, if you try to short sell, we will get trapped in the case of Australian dollar. So keep that in mind. It doesn't mean that you can do sell and buy trade in the case of Australian dollar. Initially, it's fine on Monday and Tuesday. But rest of the days, avoid doing sell and buy trades in the case of Australian dollar. You can take a buy in the case of Canadian dollar. I was explaining to you. Then I wanted to explain about Euro GBP. You know that yesterday Euro was gaining about 120 pips and GBP was gaining about 40 pips. At that time, Euro GBP came up to 85.65, 85.78. So then they gained big Euro. At that time, they have been holding GBP. Now what they are doing? Gaining big GBP and holding euro. So you find that slowly they will gain more levels in the case of GBP like yesterday, about 100, 110 pips. And in the case of euro, it will be lagging behind today because in order to drop euro GBP, they do it that way. So we need to understand, so we'll try to take a sell position in the case of euro GBP since it is mid-session and also it's already dropped. It has come to low. So let us not try to chase it. But if it is at the higher level, 85, 70, 75, yesterday I was telling you on Monday, they will be making an upward stop and above that of 85.62 and then start making the drop. Now they will come down to that of 84 level, but not immediately in this week. So you have to observe it carefully. Whenever they make an upward stop and you try to take a sell near that of the high. So these are all the three positions I thought of and I just shown it to you. Already the time is up. So I have to answer the questions which are asked here before winding up the webinar. I'll take up the questions. FX Roy, are you from Thailand? No, I am from India, sir. From Chennai. It is a southern city. Are they the big banks? Yeah, the banks are the instruments. And because see, in forex trading, only the bank terminals can be used. People cannot have access otherwise. So the bank terminals are being used or the deal rooms are being used by the big players. The big players are the billionaires in the world. Okay. When can USD CHF contrarian move end? It is getting lower and lower. No, CHF is expected to gain the levels in the long-term forecast market in week trend. Can you show an example of this strategy using a chart? Sir, basically I am preaching and telling people not to use chart because if you use the chart when the market is in consolidation like this of about 15 to 20 pips, and then automatically the chart size get reduced. I mean, the chart size remains the same and the chart gets magnified. The candle size become magnified. If you see the size of the candle, it might look big, but it might be only about 12 pips swing or 15 pips swing. So when you suddenly see a red candle formation, it might be hardly about 12 pips drop, and immediately you become panic. But if you use the live market code page, you just see, okay, now they are done 2 pip rise. Not a big candle. You don't require a candle at all. You see live. Okay, now it is 27 pips and it is 8 pips they are holding it. So everywhere by the help of the net change, you can find out how many pips they are just gained and dropped. So why you want a figure? So it is like a small kid. No, when the child is not able to identify an elephant or a lion or any other animal, then in order to give an impression to the child, we show the photographs or the pictures of those animals so that the child is able to remember the name of the animal with that of the name and also the behavior of the animals. Everything is being taught. But as grown-up people, we can look into the market with the help of the live market code page. We don't require the past history at all. So we want to know, okay, after this, what is going to happen in the market? No, that is what trading is. What has happened yesterday? Nobody bothers, because I have taken a position now, whether my position will make profit or not. So when I am asking people not to use the chart, you are asking me to go away from that and tell me using the chart. So I will not use the chart, sir. I am extremely sorry. And I want you to get accustomed to that of the live market code page. You will find that it is a very, very simple tool to use. And you will be able to make a comparative study of all the currencies in one stroke, in one glance. So ultimately, watching this should give us the idea how to trade. Instead, you should not trap us and just forget about the trade. We miss the opportunities in the market. I do not want to go in details of it because it may lead to controversy. Then, Basim, is it okay to buy GBPN? Yes. JBPN, you see that both are contrarian move and both are showing the positive net change and they will make a move. But GBP, they are going to rise, but corresponding drop will be seen in the case of USD yen. So in that case, that is why I wanted to take a sell position, but the limit is not filled. Already euro has gone up. So limit is not filled. Only GBP position I have. So these are all only limit because I had taken a long time in explaining it. That is why I could not take the position. Doesn't matter. But if you find that the understanding is helping you, that is fine. So exactly around 8 GMT, you can take a position. And you will find that position start making profit. If there is any error, I'll come back by 13 GMT. You can point out. My decision is wrong. You can point out. If the decision making is really helpful, then you try to see how exactly you can fine-tune it using your own other thinking abilities, using your own other chart study or whatever it is. Okay. Are there any trading chances in Euro and GBP crosses now? Euro GBP cross, already they had dropped it. After the drop, selling is no good. No, because, see, if you sell, they may drop about 10 to 15 pips. And you will be expecting about 30-40 pips profit, which may not happen. Then you lose patience and you don't keep stop at entry. And tomorrow again they will make an upward move, a stop and before making a drop. Then you close your position with loss. Don't do that. Actually, after taking a position within 2 hours, if it is not making profit, there's no point in holding it. No, it's better to close and relook into that market. A smart trader does it. In Mohan. Mental note high and low between 230 and 330. Exactly 330. See, from 230 onwards, they will start setting the highs and the lows in various currencies. Finally, by 330 GMT, all currencies, they will set it. Now, because I also teach how when they are setting the initial lows and the highs, we can take positions. That is why I ask people to note down from 230 to 330 GMT. No, exactly 3:30 you can note down. Then thirdly, when will USD-CHF start its upward gaining long? So they will they will be rising it from today. They will start rising it USD-CHF as a contrarian move. You find a contrarian move happening here. And see here again, no, USD CAD is gaining and all the denominators are gaining. And excepting the numerator, euro. So you will find during the course of the day, all the 5 pairs are gaining the level. Slowly, AUD also gains level. So that sort of contrarian move they are expected to do it today. Are you bearish on USD? No, I am not bullish or bearish. I just noted down that they will make a small drop of 30-40 pips in the case of USDN. I wanted to enter around 97.55, which is not happening. And I'll watch for 30 minutes. If it is not happening, I'll either just delete the order or take the market position. But gaining for about 20 pips, I'm not interested. So I'll just delete this particular order. So nothing to do with the bullish and bearishness. And there are no wrong terminologies for 20-30 pips. If it is a big move of 500,000 pips, then we can call it. Then Drew, will you be going over to the remaining slides in part 2? Yes, remaining slides I'll explain during part 2. Okay then. So it's okay. Alien, did you see USD-CHF starting to rise? Yes, USD-CHF is also expected to rise from now. Then one of the better webinar you have given to explain your, okay, thank you. Something Mohan. Something you said about Australian dollar pair, about multi-year gain. Okay, Australian dollar went up to 1.10 level. That is the multi-year peak. Then from there, they just reversed it. That explained it in other webinars, and that is recorded, and you don't have patience to go through all the webinars. No, that is unfortunate. So if you are in the learning process, you have to attend to. See, Australian dollar, euro and GBP went up to multi-year high in 2008. And Australian dollar went up to the multi-year high in 2012. Okay, at the time of 2008, Australian dollar was trading around this level. Then euro was around 1.60 and GBP was around 2.11. So that is how they make the multi-year move. So Australian dollar, they finish the multi-year rise. They are going to drop it further down. Hence, I said don't take. Then base in Jabba. Is it okay to check New Zealand other than Australian again major? You can do that. And you have to again cross-study New Zealand dollar with that of euro and GBP and see the respective crosses. And in this link, you find in the below, the other New Zealand dollar crosses are also seen. You find the relationship between New Zealand dollar and Australian dollar. Then try to find the relationship between the majors and New Zealand dollar. So you have to do a relative comparison simultaneously. With the help of the net change, you can do it just manually. There is no sophisticated calculation needed. Make your study as simple as possible, which will be able to give very good profit. See that GBP, I was telling you, I'm not asking the operators to rise it, but it happens because they don't have any other choice other than doing it. So if you read them, and we will be able to definitely see that we are making profit. There's no point in blaming the players because they are doing it with various objectives. So we can only read them and trade along with them and earn our money. Nothing more than that. Okay. Thank you one and all. I'll come back so these are all the positions and I'll come back by 13 GMT. From 9:45 to 13 GMT, you can watch the market and see what happens to this. Only GBP position I have. And see what happens. And during the second part of the webinar, I will explain to you further in details what are the things which I missed here. I'll also explain and you can ask more questions. I'll be able to certainly answer to those questions. Thank you one and all. See you by 13 GMT.